Good evening, everybody. You got Kody Ashmore, Director of Weekly Option Strategies here at Simpler Trading, bringing you the options free video. So what I want to talk to y'all today about is buying the dip until proven otherwise. And I'm going to explain my reason for being bullish now until proven otherwise. And yeah, we'll talk about it. I want to show you why I think that, or why I am leaning that way. And I also have an area where I believe I am no longer correct. So first, I want to go over to the weekly chart. For me, my beginning stages of trading, I was a pattern trader, like bull flags, bear flags, triangles, so on and so forth. And right here, it looks like one giant weekly or monthly bull flag, right? That came all the way down to the weekly 200 and boom, boom, and now we're breaking out. Now, what makes me think potentially that this is going to continue? Like, I don't think we're going to skyrocket to the highs. I think it's going to take a little bit more effort than that, but I am thinking this tide has already turned. And I am going to use the case of volume for that. For me, volume is easy to interpret. And to me, I can't, like, it's not open for interpretation. Like with volume profile and levels, like, I mean, it's there. You can't deny what you can actually be seeing. So what I'm going to point your attention to is right here, I have my 2-year volume profile. And the reason I'm doing 2 years is because this is basically the volume profile since the bear market began. So I have this up here because since the bear market started, I was like, okay, well, I want to know where all the volume is for the year. And okay, or since the bear market. And right here is point of control. So you can see we are above all of the volume that has transacted in the ES/SP 500 futures since the bear market. And then we have broken out above that trend line that I'm sure everyone's talked about or has seen. So since we are above the volume and we have this bullish continuation pattern that is breaking out, has me leaning to buy the dip. Now, what about today? Did the dip occur? Well, I think we're gonna have to consolidate a little bit. So another thing I'll point out here is these are my 3-month volume profiles. So the reason for 3 months is because they're basically every quarter. And you can see this purple box that I've shaded here. It's basically from this node to this volume profile. And you see this is exactly where we're stalling. The issue with right now is we are above volume profile, or sorry, the point of control, sorry, for the 2-year. We are above it, but we're running right into the second largest, which is right here. So this level right here is going to be a level of resistance. And if it's going to be resistance, it's going to take a little bit of effort for us to get above. And if you were to look at today, you can't deny we came down to, we broke out of that trend line, right? Came up. We're pulling back to the daily 21 EMA, and you could assume that that could be a level to buy, right? Or, buy the dip. I personally don't think it's going to be quite that easy. Kind of how I am interpreting this is I think we're going to kind of chop around and build a squeeze through here first. I don't think we're going to go boom through. I think I'm leaning more towards, sure, we have a good reversal candle off of this HVA that's here on the monthly time frame. Then we have the 3-month time frame here. I think we're going to more of like kind of chop around, maybe build a really big flag or potentially like a ascending triangle. So all that being said is I think that all dips should be bought and be ready for more upside. Now, where am I wrong? Like, there is an area where I could be completely wrong on this, and you know what? Maybe we just trade in a range because I'm also willing to admit that may happen as well. And so I've zoomed out a little bit, and if this large HVA is the level, we could also be stuck in a range until some type of economic data comes out that could flip the news around, right? So we're going to go from these HVAs right where we're at down to about the point of control and then back across. So what if we're just stuck in a range here? Okay, I mean, that's completely possible too. Hit the moving average back up until some type of economic data comes up and changes it to either direction. Now, where am I going to no longer buy the dip? Where I'm no longer going to buy the dip is if we get below this volume, the 2-year point of control down here. And the reason I'm This is pretty much my line in the sand, basically 3,900. This is my line. If we get back below here, I'm going to start targeting the lows again. And I'm just letting volume be my guide. I'm taking biases out of the system or out of the analysis. It's more of like, this is pretty obvious. We're above all this volume. We ran up into another area. I think a pullback makes sense, and then get ready to go to the upside. So you have the pattern, you have volume. I'm just looking for it to play out, but that's pretty much it. So I wanted to show y'all. I'm not sure. I don't believe most people are talking about this. This is just the way I am analyzing it above the bear market point of control. So I'm leaning bullishly with this ginormous bull flag, and we'll see if things go as planned. I could be completely wrong, but also watch that basically 4,100 level. This is where that big HVA level is too. If we get above that, next up, call it 44. Well, we'll see. Everyone have an awesome day. Enjoy your weekend. Hope your Super Bowl team wins, and take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me